Hello all, welcome back to our YouTube channel from Open Fin Innovation Lab, Bangalore. From past 2 weeks, we have gained around 100 plus subscribers to our channel and thank you all for your continuous support. Today's topic will be looking into something related to finance like mutual fund. Whenever it comes to an investment, people usually they think of creation of assets or managing their portfolios like investing in stock markets, mutual funds and all. So we'll just twist it like how about using a programming method to understand the mutual funds, like what to be bought, what to be redeemed or switched, and what is to be kept for a long time and all. So I guess people who are financial enthusiasts or who are more interested with the time series data and all might be find it more interesting. Let's get back to the video. Can we trade with mutual funds with Python programming? This is just an overview for using the technology and programming, but not to be taken as an investment advice. Please like, share and subscribe to our channel. We post new content every week on. What are mutual funds? It is a professionally managed investment fund that pools money from many investors to purchase security. It's a financial vehicle that pools assets from shareholders to invest in securities like stock, bond, money markets. It is managed by a professional fund manager. Based on different features, risk, rewards, there are 4 types of mutual funds. They are money market fund, bond, stocks and target date funds. In this entire slides, we come across something called as net asset value, in short NAVs. It is a market value of the security held by the scheme. It is the price at which investors buy, which is called as bid price, fund shares from a fund company and sell them, which is called as redemption price to a fund company. So total NAV is given by the difference between assets and liabilities, which is divided by the total number of. So there are other different types of mutual fund schemes. One which is based on maturity period. One can be open-ended fund or scheme and the other can be close-ended fund or scheme. So open-ended funds, they are based on the subscription and repurchases on a continuous basis. They don't have any fixed maturity period and their key feature is liquidity. Whereas closed-ended funds are stipulated maturity period will be there. For example, they can be between somewhere to 5 to 7 years and they are open for subscription only during a specified period of time at the time of launch of the scheme. Investment in the scheme at the time of the initial public issue and thereafter the buy and selling of these units depends on the stock. There are schemes according to the investment objective as well. There can be growth or equity oriented scheme, income or debt oriented scheme, balanced funds, liquid funds, gilt fund and index funds. Now we'll find out the difference between them. In growth or equity oriented scheme, comparatively they are of higher risk. They are usually good for investors having long-term outlook for capital appreciation. Usually they invest a major part of their corpus in equities. In income or debt oriented scheme, they usually provide regular and steady income to the investors. Generally, they are invested in bonds, debentures, government security, money market instruments. The funds are not affected by fluctuation in equity market, but NAVs are because of change in interest rates in the country. Appreciation of capital is very limited. So in general, whenever this interest rate will fall, NAV of these funds increase in the short run and vice versa. Coming to the balanced fund, they provide both growth and regular income. They are of moderate growth and funds are affected due to the fluctuating share prices in the stock market. In liquid funds, there are income funds which provide easy liquidity, preservation of capital and moderate income. very appropriate for corporate and individual investors to keep surplus funds for short periods. Coming to the gilt fund, they are usually invested exclusively in government security, so there is no default risk as such. In index fund, they replicate the portfolio of a particular index such as BSE sensitive index, S&P NSE 50 index and all. So NAV of these schemes rise and fall in accordance with the rise or fall in the index. So what are all the things that has to be known about these mutual funds? We should know when to buy them, when to switch or So having enough introduction about the mutual fund to get started with, now we'll answer our basic question. So how Python programming can be used here. I came across a very interesting library called MF Tool, which helps us in getting real-time mutual funds data in India. This library collects real-time data from the Association of Mutual Funds in India, which is the regulatory body for mutual fund sector in India. It is a division of SEBI, Ministry of Finance and Government of. So what are all the key features of this library? It retrieves the last updated codes for mutual fund scheme using scheme code. It obtains the list of schemes and their codes. It gives all the information of registered scheme in the AMFI, and it gets the NAV's track record or the historical data. So just by using Google Collaboratory Notebook, I could use this library very easily. I'll be sharing my notebook on GitHub, and I have also provided the reference for the same in case you are interested. So here you can see how to install the MF tool. Just use this pip install command to get the library installed and pull it into the notebook, and you can start using it. And there are also, like, you can get the scheme codes, and the data is represented in the form of either data frames or a dictionary also it can be used. So here you can see all the NAV's historical data. So after a brief overview regarding this mutual funds and how a Python library can be used, I have a question. So the time series model like ARIMA, Prophet model and all, do they hold good in mutual fund forecasting? If yes, to what accuracy? And how quantum algorithms and quantum computing impact the financial markets? And what is your favorite mutual fund? Let me know in the comments below. Please like, share and subscribe to our channel. We post new content every week on Friday. Thank you.